Chairman, I'd like to introduce Mr Craig Perry, who is a shareholder.
Thank you, Chairman, Directors and others. My question perhaps more is in relation to item 1. However, given the stage of the day that we are at and that I've travelled a long way, I thank you for the opportunity now. By way of background, I'm a farmer, shareholder and customer who, as some of you would be aware, has had a very difficult relationship with the CBA going on for a number of years and unfortunately continues to this day. My question is in relation to the remediation program that we've heard about extensively today. I do acknowledge that the remediation program thus far has been significant and represents a shift in the bank's traditional thinking, so congratulations for what has been done so far. My question is, the bank has admitted it has been involved, and other banks have admitted they have been involved in manipulating the bank bill swap rate illegally and unlawfully. How does the customer affected by these manipulations be compensated, considering the bank sets all its commercial rates off the BBSW rate? And how does the bank intend to explain how this situation does not affect the responsible lending conditions under the Banking Code of Practice? Thank you.
Thank you, Mr Perry. Well, as you know, we have entered into an enforceable undertaking in relation to that. But in terms of the details on responsible lending, I'll ask Mr Common to comment.
Sure, Mr Perry, nice to see you again. So the BBSW matter that you're referring to, there was, I think, 3 instances that were referred to in the matter between ourselves and ASIC, and which we offered the enforceable undertaking. There's just no impact on a pricing perspective. The BBSW market is a very deep and liquid market, so there's absolutely no impact on customer pricing whatsoever. When you refer to responsible lending, that's a completely different set of obligations, so perhaps I'll just separate that completely from BBSW. And as you may be aware, there's a number of provisions that are incumbent on a financial institution to make sure they're making adequate inquiries and understanding the financial objectives of their customers and ensuring that we're providing credit that is not unsuitable for their needs, and they, of course, have the capacity to repay those facilities.
Thanks, Matt. Well, on that basis, if there's no impact on customers as per the pricing, is it realistic for us to expect Mr Nigel Williams, who has some outstanding calculations of ours, to reply to them?
I'm not aware of anything that's outstanding. As you know, I've met with you and your brother and other members of your family numerous times. I think Mr Williams accompanied me the last time that we met, when we met in Melbourne. I think as I understood, we'd corresponded in detail since then. I think we're now entering into farm debt mediation. I'm certainly happy to meet with you afterwards. Mr Williams is here as well, so if there's something that's outstanding from our perspective, that would surprise me.
The calculations are unanswered.
Okay, well, let's have a discussion about that, because it's my understanding that they were answered, but perhaps they weren't answered to your satisfaction.
Thanks, mate.
Thank you.
Thanks, Mr Perry.